Hi guys again. So Rajeev is here with me. Welcome Rajeev to the conference.
Thank you, Sammy. It's a pleasure to be here. Thanks.
Wonderful, wonderful. We are lucky to have you here. You probably are not so lucky because, as you just told me a little bit earlier, that you were planning to attend your daughter's wedding in London today, but because of flight restrictions, you can't go. So we are lucky to have you there. Although you're not lucky to attend your daughter's wedding, but congratulations anyway. And Rajeev, I briefly introduced you before we started. Would you mind just giving us really a 30 seconds overview of the key positions you've had before?
Well, I've been a boring banker, I guess, for 3 decades in various places. I started my career with Citibank, and I was very fortunate with Citibank over a period of 20 years, 2 decades, to have worked in multiple places. So Citi has this concept of moving people around in a world that wasn't so easy to travel in. I had the good fortune of not just working and living in different places, but actually staying there and experiencing things, etc. So 20 years with Citibank, I had a lot of turnaround positions. I could create new businesses. I went to all kinds of emerging markets. And that was really a turning point in my career. The next 15 years I spent with Temasek, where we set up, I was one of the global founders of, there were 3-4 of us who set up a group across 12 countries, 14 assets, 80,000 people from scratch in 2006 till 2018 or 19. We created a peak value, which went into tens of billions of dollars. But I guess what is more important was not just the value, it was just the fact that you could create value, you could understand clients, you could work in multiple markets. So I've had the good fortune of working in Asia, EMEA, Africa, and in many markets and geographies in the world, Russia, etc. And finally, I went non-executive the last couple of years, and I sit on several bank boards today in the region, in Europe and Middle East and India. And I also run my own family office of investments.
Wonderful. Perfect. Thank you so much. So we'll start off the discussion and we have, I think, about just over 20 minutes. So I'll crack on here. Rajeev, we talk a lot about a bank of the future and open banking and how open banking is going to really reshape the banking landscape, because data information will be available to non-banks because the data is really the customer's data, and more non-banks will be interacting in this space, so providing competition, providing innovation. Some regions have decided to mandate. It's so important that in EU this has been mandated, so for banks to open up their systems. What is your position on open banking? Is it something that's beneficial for everyone, or is it more beneficial for the non-banks, the fintechs, than it is for banks?
That's an interesting question. First and foremost, anything that's good for the customer is good for everyone. So I think open banking as in the 90s to what we're seeing today. Today, whatever we're seeing is a culmination of some of the changes that took place over time. We just had a very different kind of talent going into banks. Very creative as far as financial structuring is concerned, very creative and very bright in terms of how business is done. But the level of creativity, the level of ability to be able to move fast and move and do things has been really the preserve of the tech industry. So in many ways, this is I think a win-win-win, I would say, for non-traditional players, for banks, as well as for the customer. That's most important, because that just opens up a bunch of things. You referred to PSD2, I assume, when you talked about the EU regulation. And I think the UK actually took a stance much faster when they talked about open banking. And while it is a regulation today in Europe, I think increasingly the acceptance of this needing to be a regulation is happening across the world, and you're seeing a lot of change. But it is one of those classic good things that you can see businesses picking up much ahead of even regulation coming in, because there's a strong realization that if you don't change the way you work, if you don't accept the fact that you need to unbundle yourself as a bank, the fact that you can't afford to have any further clunky systems, the fact that you cannot possibly ignore what the client needs, and the fact that we start recognizing that each client is different. You know, in the 80s or the 90s, we used to do marketing where it was media telling you what to buy, and we would believe media and go out and buy it. By the late 90s and early 2000s, we started listening to each other. There was social chit chat, and it was really the attitudes and perceptions of people that decided what we would buy. Today, decoding the consumer's mind is a very one-to-one private affair. And perhaps the only thing that really knows what you want at any point of time is your phone. And the reason I say that, that tends to be the most serious conversation people have without even realizing what's going on. There's a bunch of data which always exists. The difference is today, because of technological development, because of the availability of hardware, because of some of the changes that have taken place in the world, this data can now be analyzed. So what is this regulation? This regulation only sets pillars of convenience, the fact that there is now got to be a more secure transaction across APIs. It's got to be transparent. So there are certain reporting requirements, and they can't possibly be misused. And there must necessarily be access to accounts available to authorized users. And banks need to provide a sandbox. So this is all about enabling the possibility of innovation coming and being a part of the bank and plugging onto it. So I think this is a massive shift. And the second shift that this is creating, I guess, is the realization that the intellectual property of running a bank was the value created at one time. One of the elements of, and probably a stronger element as we are seeing in the days ahead, of relational capital really being the value driver is only being understood now. And by relational capital, I mean, whoever has the client's relationship, whoever is the one that is controlling the journey of the client, whoever can control the client's experiences, has the data, has the ability to mine that data, aggregate the data, analyze the data, and use predictive analytics to go out and satisfy the customer needs. It is that end of the value chain, call it front end or call it whoever is closest to the client, that will be the biggest value driver in the world. And as a result, when you look at how banks are valued and you look at how asset-light entities are valued, the multiples are completely different. And the reason for that is, it is more important to understand how 7 billion people, going to 9 billion by 2050 or whereabouts, that's a large number, with almost half of them around the world unserved or underserved. I would say even a larger number underserved. And a need for people to have the portability to decide what they want. A consumer that is increasingly going to be far more internationally attuned in terms of mindset, and the needs of business being increasingly cross-border. So I would say there are going to be winners and losers. That's an obvious question everyone asks. But my sense is banks can also be the insurgents within themselves. So if you end up, one thing for sure, if anyone retains an incumbent mindset and refuses to budge and change, refuses to acknowledge the importance of data, refuses to acknowledge the importance of listening to the clients, I guess there is very little hope. But whether banks will win or fintechs, I would say the battle is on. It's a classic battle between any incumbent and any insurgent in any situation. Whoever does the job better is going to win. If you ask me who is at an advantage, I would say banks are at an advantage because they have an existing relationship. They have the regulatory umbrella over them. The disadvantage is that they're not able to change their mindset, if they're not able to reshape their culture, reimagine the customer journey, and redesign their operating model. So it's going to be an interesting battle. I think the battle rages on. The other thing I want to say is this is not a zero-sum game. So it is not a game where if one wins, the other loses. I think this is going to be a game where at the end of it, the profit pools are going to be larger. So there is really a larger opportunity for everyone to come in and take a bigger space. Because once you satisfy a customer need, the profit pools go up, new segments open up, new markets open up. Clients realize that they can now satisfy needs that were erstwhile not being provided. And it's a classic case of even how we shop on Amazon today. We end up buying much more than we would have bought perhaps in the past. So this is a very interesting journey. And this journey has been going on for a long time. The last point I want to make here is, open banking has become a buzzword. When the consultants pick up a word, it often becomes a buzzword and becomes democratized. But I think open banking as a concept, APIs, the fact that we could work across people, flat file transfers, the fact that collaboration was key, understanding data was something we did back in the 90s. So it's not alien. It's just that the level of availability and the ease of mining and the kind of open source platforms that are today available make the entry barrier to do this far more effectively at a very low cost. And I think we are going through probably one of the biggest secular growth trends in the world. I think it started about 5 to 7 years ago. I still think the next decade is going to be an outstanding year, not 2020 notwithstanding, but I think we're going to see some very exciting times. So the need to change is very, very strong.
Wonderful. Thank you for that. You mentioned relationship capital, and I think banks are very conscious of that to retain that, because they have the the front end relationship with their customers. And that is changing because, you know, fewer people are coming to the traditional branches, perhaps fewer, you know, phone calls, and it's becoming more and more automated. Do you think this shift towards digital, there is a risk of losing that relationship capital? Because, you know, it makes sense that there are certain things that you would keep them automated because, you know, if you want to check a balance or you want to make a payment, it should be self-service, automated. Whereas, you know, traditionally, maybe many years ago, there would be some interaction with the bank, even for those small things, you know. So is that something that banks are conscious of? How are they going to retain that relationship capital in the face of fintechs providing new and new innovations, products? Do they have to do what the fintechs are doing?
So I think that's a very good question. First and foremost, in my experience, you know, we moved from in-branch banking to remote banking, whether it was phone banking or whatever else it was. And over time, we are now moving to open banking. We've also heard of terms like omni-channels and, you know, specific channels. And I can only say that, and I say that with experience, I don't think branch banking was ever a relationship-oriented thing. There was just no choice. If you needed to get cash, you needed to go to a branch. If you needed to go for a loan, you needed to go out and physically meet people. It was also a different world. It was a world where people were not as connected, and it was also a world which was not as populous. It was also a world where we didn't have as many vehicles, and cities were not congested. So I think several things have happened, and for relationship to be maintained as they were in the 80s and the 70s, when people would go to a bank and it would be a big event, is no longer possible. So things have evolved. Phones, I guess, are efficient, but they're not effective. They don't build a great relationship. And in today's world, I mean, everyone is busy, everyone's mobile, people are moving around, people don't have the time. And look at us, we're probably in different time zones, and we're talking as though we're just at the same time zone. We need access at the touch of the button. And people need it without really interfacing with everyone. And then people sometimes need it across systems. And what open banking does is it completely changes that. So I think relationship is not the act of meeting people. The relationship is not the act of interacting. Relationship is the act of being able to understand, predict what the person needs, and be able to fulfill it in the easiest way, and possibly go beyond yourself. So if Sammy and I are friends, and you reach out to me, you're probably looking for something which can be informational. It could be some help that you need in Dubai while you live in London, or I could ask you in London, and I expect you to be able to connect me onto something or be able to fulfill something. Now, this is really a person-to-person interaction. Think of any institution, whether it's a fintech or a bank. How do we sit back and enable that journey for the client? One of the things bankers need to always remember, and I've been saying this all my life, and I think most people realize it, nobody comes to a bank to buy a financial product. If you're a business or you're an individual, you come in as an individual to improve the quality of. You either have something to buy, a holiday to do, a loan to take for a home, or whatever. The bank transaction is the boring part of the transaction. It's actually the impediment. It's actually the least exciting thing. It might be value adding, it might be enabling you, but that's not what you buy. When you take a car loan, you buy that red Ferrari. You don't sit back and buy a car loan. So how do we integrate or embed the financial services product into the journey of the client? How do you fulfill what the client is really looking like? And when that happens, you build a relationship. Relationships are not built by by just meeting people, filling forms, talking to them and saying, that's really the negative part of the transaction. That's the pain and that pain has to be eliminated. And so you call it straight through processes, you call it automated, rule engines, or you call them business process, robotics, process automation, etc. Those are buzzwords. But I think what's very important to understand is each of the important journeys, which changes in a customer-centric fashion for people, has to be analyzed, understood, the pain points to be taken out. Only then can you build a genuine relationship. So if you're a business, you're looking for someone who can help you conceptualize an opportunity, realize the opportunity, invest for it, get advice, and be able to move forward very quickly. It's not about providing the guarantees, filling the forms, getting the resolutions. That's the painful part of the transaction. And that often is a relationship destroyer. That's really the cost in the whole game. So how do we use technology today to be able to make that? How do we transit between accounts, whether it's eKYC, whether it's pulling out credit bureau data, whether it's analyzing statements on an automated basis? It's about getting centralized liability that the client has, and even understanding and drawing down the financials from wherever they're based, and being able to tell them in 2 minutes flat or 20 seconds flat, so your loan is approved. And guess what? It's not that the loan is approved, your transaction's done. Your food is shipped. Amazon never tells you that your transaction has been passed on to the merchant. It says that your shirt is on its way. Your food is on its way. Your vegetables are on their way, and they will be there in no time. And are they there yet? If they haven't, can I help you? So they are predicting behavior. They're figuring out. So at the back of that, there's a traveling salesman problem. There's an optimization. There's everything that goes into supply chain, operations, research, etc. has been built in. So there is this mass ability to do a one-on-one customer centricity is what relationship capital is. And whoever wins that game will win. I don't think fintechs necessarily are going to be as agile. I think they definitely have the advantage of being lighter. They have an advantage of being lighter on regulations. And we have to remember that open banking is really not that open. And I say that because you have to be an authorized provider of services to be able to plug onto the APIs. A bank that does not open up its APIs and does not become a part of the ecosystem will lose. So the important thing is clients today are mandating this change. The data is mine. I decide which customer journey I will choose at any point of time. I decide how I enter and ask for my services. So if you're not a part of the ecosystem, if your products as a bank are not a part of the marketplace, and if you're not able to use data to activate the ecosystem, such a bank will lose. So is it possible for a bank to be able to win the relationship game? Yes. Do banks historically have relationships? I would say no. They have the painful end of the relationship. They don't have the delightful end of the relationship. And I think today banks are going to be able to link with the ecosystem far better. Regulation always makes things easier. And I'm not a big fan of saying regulation is not good. Over-regulation is not good. And having a negative attitude towards regulation is not good. But regulation gives credibility. Regulation leads to investments happening. Regulation gives trust and transparency. Regulation also provides incubation. Some of the biggest innovations in the world, almost everything, even vaccines, have come in through governments, because the risk that is taken to be able to create that change is often taken by the regulators themselves. How it gets administered is the painful part of the journey. So if I was as a banker to look at to my relationship with regulators, I would absolutely invite regulation. But the interface with the people who are administering it may not be as exciting at times. So we have to break down the pain points. We have to break down the moments of truth, and we have to understand how we can make the journey delightful and make sure that the client gets the end product or the end service or the end dream or the end desire. That's what we are in it for. So we are part of an embedded finance journey, which was erstwhile not possible. Today it is. And that's where I guess the role of the banks will change. And I have to say that a massive amount of change has happened through federated IDs, digital identities, or either through social media. There is today, because of trends that we've seen in 9/11, 2008, and now 2020, we've all in some ways lost our physical control over our physical identities, our financial identities, and health identities. But all that has enabled the banks, the countries and the globe and the governments to be able to give us a common identity. And that identity can now be ridden by banks and independent fintechs, etc., whoever is agile, to be able to leverage data, to be able to leverage the abilities that are possible, to be able to use the products in an agnostic fashion with banks and fulfill the needs of the client. And that will increase the size of the market exponentially.
Excellent. I guess, as you said, that there are still a lot of underserved customers, even across the world, even in the rich countries, for whatever reason. They may be banked, they may have cards and stuff, but they just tend not to use that sort of part of the system. So I guess just to summarize, and I think it's relevant to the theme of this conference as well, is that all that what open banking is bringing, the new way of doing banking, all that is bringing is perhaps more focus on the resilience, on the functionality, on the responsiveness of the systems that you have, and very importantly, on the experience that they deliver to customers. Because as you say, that people don't want to be doing, they don't want to be speaking the language that banks speak. They want to be speaking their own language, right? They don't want to be chasing, where's the voucher gone? Where is the chargeback gone? Right. And you mentioned Amazon's one-click model, and of course, famously, Uber has its model, right? That you don't have to worry about taking a card out or even think about a payment. You just take a ride, and then you just get out of the cab, and that's it. That's done, right? So you put in all the boring, the transactional, the functional part, which is very, very essential, but you put it into the background as an enabler, not something that you have to interact with. So that's very, very, very interesting. Finally, I would like to ask you in terms of, so in open banking, so banks still have a position within the banking universe, and you're saying that it might become larger and bigger and better for everyone, and banks will be able to play a key role provided they understand and appreciate the opportunities of open banking. My final question is in terms of innovation, cryptocurrencies and all this, CBDCs that central banks and are trying to come up with digital. So this move towards digital and digital payments and stuff, will it again, to some extent bypass the banks, or banks will have to make sure that they keep investing to keep up with it, to innovate, to come up with things that actually match those innovations?
So very interesting question. And before I get on to digital currencies, crypto and CBDCs or whatever, I do want to make a distinction, since we're in this conference and we're discussing the themes that you mentioned. I think it's very important, and this is where people sometimes get lost, to understand the difference between digitization and transformation. Everything I have been talking about is transformation. I personally do not like the word digitization. And this is where I think digitization gets lost in deciding what tools we use, where we automate, what we do as a straight through, et cetera, et cetera, et cetera. Digitization is about incrementalism, and transformation is about exponentialism. Everything for a bank to win, or for even any player to win, and be it any industry. I'm not talking about financial industry. We are actually in the midst of a massive change that's going on in the world. We are going to see a massive amount of transformation, and to win, we have to have a transformational mindset, not a digitization mindset. And I would like to say this at the start of this conference today, because I know we have several COOs out there. The tendency is to focus very much on digitization, to start efficiently digitizing what they already have in a manual sense. That only makes process efficient. That's an expense-focused element. It's not an ROI-focused element. And ROI is not, again, return on investment to the bank. It's on return on investment to the customer. So the thing that needs to be thought of in this process is extremely important to reimagine journeys and to redesign the operating model. And I would say the operating model, rather than the operations of technology, is a big difference. How are you going to operate? What your culture is, what your talent is, what your structure is. Are you a learning part of the business? Are you going to be data-driven? And if you're data-driven, are you ecosystem linked? And are you constantly going to learn from every transaction? Amazon, for instance, learns from every transaction. So if you're no longer a learning company, it doesn't happen. So my word of caution here is we have to be part of the learning economy, not just part of the sharing economy. We definitely have to be part of the integration of the economy. That's just the enablement. So break up the journey in terms of empowerment, enablement, and enrichment. I guess empowerment, it has happened. Regulators have given the power to the people and to the customers. Banks are now struggling to go out and enable themselves. But please don't enable yourself incorrectly. If you only start worrying about digitizing everything, banks are going to lose it. And whichever other player comes in is also going to lose the game, because there are too many smart people out there who are out to win battle through intelligence. It's really the knowledgeable mind that makes a difference. And then finally, the end goal has to be enrichment. And enrichment has to be enrichment, of course, of the client, the customer, the employees, and everyone. And you attract people of a certain nature, and creativity comes in. The only thing every crisis leads to is some kind of disruption. And disruption can be negative or positive. I tend to see it as positive. And to be able to disrupt and to be able to effectively disrupt the status quo at any point of time is a constant journey of every insurgent against incumbents. And for that, you need bright and knowledgeable people. You need innovation. The second thing I want to say before I respond to CBDCs is the concept of open banking was started only for payments. The concept of open banking now goes across everything. I think soon we'll see open health, open conferences. This is what we're doing. We're going to see open governments. We're going to see open education. We're going to see open media. So openness is about integrating and giving a delightful experience to people. So if you're not a part of the open economy, it is not about payments. It's not about going across. So I think these two messages I did want to give: transformation, and everything's going to be open. And it's about empowerment, enablement, and enrichment. Coming back to your question on cryptos and CBDCs, I would say, personally, I'm not a big fan of cryptos, but I'm a big fan of CBDCs. So if you ask me, digital currencies are definitely going to come in. Cryptocurrency, the way we're seeing it, and I won't name any of the points, they definitely are a fad today, but they would be a fad in a world where people are sitting with a lot of money, in a world where an asset is being created with limited availability, and in a world where there's no interest rates. Now, there is no place for currency, in my mind, if it ends up being not being a mode of payment. And if it has, you walk to the market, you don't know how many vegetables you're going to get for the level of Bitcoins or whatever coins you have at any point of time. So this is obviously going to run out. Blockchain, the technology behind it, is going to be a tremendous empowerment for many factors out of it. Regulation is going to come in through CBDCs. A lot of countries have moved ahead. China is definitely ahead. And I think not only is it going to replace paper money, I think at some stage it's going to lead to fewer banks. There is no need for intermediaries. And finally, it allows governments, etc., to reach out to banks. We could bank with central banks directly. The yield curve can be controlled far better, and money can move bilaterally between countries. So the schemes and the associations themselves would be at some level of threat. So I think digital currency is definitely the future. If regulation comes in, we will see a lot more money entering, a lot more convergence, a lot more disruption, a lot more stakeholder investment is bound to happen. And I think by the end of this decade, physical wallets, physical cash will probably be extinct. I think it's extremely important that it happens. It's also important for political reasons, for financial, economic reasons, and social reasons, and it allows us to include far more people in the mainstream. And as far as cryptocurrency, the way we see it today, unregulated, is concerned, I think it has given a massive fillip to blockchain technology, to distributed ledgers, and to the existence of many more reasons that will happen. Final statement, in my view, I know I'm probably overshooting on time. I also don't think there's going to be a place for digital wallets beyond the end of this decade. I know a lot of money is going on digital wallets, but once we have digital currencies and we have the kind of infrastructure in place, I think the world will be again a very different place.
Wonderful. Wonderful. No, that's great. And I think your point is well taken about the difference between digitization and transformation. So, our task is not in banking to simply just move everything manual to digital. The task is to actually make a task better and easier and more comfortable for the consumer. So as somebody said, that when you actually map your operational processes, try to map them from the point of view of the customer. So there are certain processes the customer doesn't see, so try to identify those the customer sees and the ones that you see. And really, how can you actually improve the ones that the customer sees? Because for them, the others don't really make that much sense. So that's great. Rajeev, thank you so much for this discussion. It was very, very interesting, and thank you for sharing your perspectives. So wonderful. Thank you, and good luck, and hope to see you in London at some point soon.
Thank you so much, Sammy. It's been a pleasure, and see you soon.